Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about two more stocks that could literally surge by 1,000%, which is a 10x return on your money. These top two stocks are going to be stocks that you're going to want to hold for the next decade because they are absolutely phenomenal companies in my personal opinion. But as always, remember to do your own research on these companies to make sure that they fit into your personal portfolio because we could have different investing goals. For more videos like this one, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below about Mercado Libre and the trade desk, and without further ado, let's jump right into today's stories. As you all know, the stock market is a very effective way to build wealth over the long term. In fact, the S&P 500 has returned a total of around 436% to their investors over the last 20 years if you would invest into ETFs such as VOO or SPY, which means that the annual return of the overall stock market benchmark of the S&P 500 index is around 8.7%. These are very fantastic gains that can not only keep your wealth over the long term, but continuously build your wealth over the long term, which is why I personally love investing into ETFs that track the S&P 500 and even QQQ because I really like the NASDAQ as well. However, if you are willing to do some of your own research to look into other companies and handpick some very good stocks to put into your individual portfolio, such as Apple, Tesla, Microsoft, Google, Amazon, Walmart, Mercado Libre, and the trade desk, they could make you even richer than investing into an S&P 500 ETF. However, I think having a balance of both is very imperative for long-term investors. You need to have your blue chip stocks, your ETFs to make up your foundation so you can have a risk-averse portfolio. However, it's also good to pick a couple of single stocks that you want to get the majority of your growth from overall. So these particular companies that are on this list, specifically Mercado Libre and the trade desk, are in a very strong and competitive position in their respected market, and the author of this Motley Fool article believes that these companies could literally 10x over the long term. So let's dive in to see why the author thinks this and if I personally agree with him. So we're going to start off with one of my personal favorite stocks, which is Mercado Libre. I've done many videos on Mercado Libre and I am still very bullish on this company overall. The current stock price for Mercado Libre trades at $1,150 per share. However, instead of buying this share outright, you can always have a brokerage that offers fractional shares such as Robinhood, Webull, and a plethora of other brokerage companies that you can invest fractionally into shares. It's called fractional investing. So you could buy into the Mercado Libre stock, which is right now around $1,150 for as little as just $1. So don't be intimidated by the current stock price because you can definitely find a way to invest into this company at a much cheaper price point. However, with that being said, their low-end 12-month analyst price target is $1,100 for the next 12 months. However, their low-end price target for the next 12 months, according to analysts, is $1,100, while the average price prediction for the company over the next 12 months, according to professionals, is $1,622 per share, while the most bullish price prediction over the next year is $2,036. Currently, 22 analysts have initiated coverage on Mercado Libre stock, ticker symbol MELI, ticker name MELI, with 19 of these analysts saying that this company is a fantastic buying opportunity, while only 3 of them say to hold the stock, compared to no analyst that I researched said to sell the company, and also no analyst that I looked over said that the company was going to underperform the overall S&P 500 benchmark, which we referred to earlier. If you didn't know, Mercado Libre operates one of the largest e-commerce and fintech systems in Latin America. They're basically like the Amazon of Latin America, and merchants who sell products on their platform absolutely love Mercado Libre because Mercado Libre has a lot of activity on their platform and it draws a lot of customers, and these merchants that are selling their products want to access as many customers as possible so they can make money, and this is also very good for Mercado Libre in general. The company offers several value-added services including logistics support, digital advertising, as well as access to credit. They also have a very successful fintech platform that has become increasingly popular in the overall marketplace, both on and off their particular marketplace. For instance, their total payment volume increased by around 55% to $77.4 billion in 2022, and the number of their off-platform merchants doubled. So clearly we have a fantastic growth trajectory for this overall company. Mercado Libre also has a fantastic leadership positioning in terms of their fintech fintech platform as well as their e-commerce platform, which means that they are a market leader in this space, which is very competitive. They have a solid balance sheet and fantastic financial results. Listen to this. Their revenue skyrocketed by around 78% to $7.1 billion, and the company also posted a profit of $1.69 per diluted share, which is a huge increase from a loss of 7 cents per share in 2022. So this company is rapidly growing and rapidly expanding. They also have a great presence in online retail sales over in Latin America, and that is expected to increase at around an 18% annual rate, or a CAGR of 18%. So this market is going to reach around $138 billion by 2024, according to Statista, which means that currently the company is only scratching the surface of their total addressable market, which means that over the long term, this company could literally be worth hundreds of billions of dollars. And to quantify this, on top of them already being in a very good competitive advantage because they are the largest e-commerce company over in Latin America, and they also have a very adaptive fintech ecosystem in that region as well, the company is currently worth around $57 billion because that's their market valuation. However, over the long term, analysts actually believe that the company could have a market cap as high as $450 billion by 2032. So this is extremely bullish news. But now let's look at the stock price chart. So as you can see, the stock price had very solid stock price appreciation, and then recently, within the last 2 years, the stock price absolutely surged higher, where the stock price saw a double top and then ended up falling due to various macroeconomic factors. Now, this is not to say that the company can't continue to fall, but I actually already see quite a good rebound in the stock right now. So overall, according to analysts, buying the MELI stock is a very good competitive position to be in right now, and over the long term, if you're willing to hold this company for the next 10 years, it could pay off very handsomely for you. This is also one of my personal favorite stocks because I think that this company is clearly dominating their respective market, and this should make investors as well as potential investors very bullish on the overall company. But with that being said, always make sure to do your own research on this company. This is still a very risky stock because they are still developing in their particular region, but I think this is good because it could give some people some international exposure to other companies across the world. Now, with that being said, let's move on to our next stock, in which analysts think can literally 10x, and that is The Trade Desk, which currently trades for around $66 per share. However, the low-end analyst price target is as low as $29. So clearly, The Trade Desk stock price could continuously trend downward if the most bearish negative analyst is correct. But now we have to compare this with their average price prediction among professionals, which is $95 per share, which would give us a great increase from the current stock price of $66. Not to mention that the bullish price target is $125 per share, which is absolutely fantastic. Currently, 22 analysts are covering the stock, with 16 of these 22 analysts saying to buy the stock right now. 5 of them say to hold the stock, and only 1 of these analysts are advocating to sell the stock. If you didn't know, The Trade Desk specializes in digital advertising, and they do this by using artificial intelligence technology to help marketers purchase ad impressions. This means that they have created a way that will automatically have real-time bidding at the cheapest price, and that will also make their money stretch further. So this is very imperative for marketers to rely on The Trade Desk's artificial intelligence because it's going to help them over the long term. The company has also allowed their clients to make data-driven decisions right before their ad is actually displayed, so they can further penetrate and market various campaigns. They can adjust it regarding the measures that they want, and it optimizes their overall ad campaign overall, which has them see more return on their initial purchase or investment into the company. Trade Desk is literally one of the largest independent platforms for ad buyers, and it's not affiliated with any particular content. And this creates a great competitive advantage when we compare them to, say, Google ads or Alphabet or even Facebook ads from Meta platforms. And overall, they have a very good competitive advantage in the overall ad space, not including their artificial intelligence platform, which just makes the company even better. Right now, the platform sees around 13 million ad opportunities each second. That means that they capture a lot of consumer data regarding the various preferences and tastes of the particular people people that they are trying to target, depending on what the ad is for. This makes their artificial intelligence models even better at targeting specific individuals over time for the content that they want to see. Customers of The Trade Desk also love this company and their overall technology, which is why they have a retention rate for their customers of over 95%. And this is an average over the last 8 years. So literally 95% of the users that use The Trade Desk are not only very happy with it, but they are still using it 8 years later, which is absolutely fantastic. This has then been reflected very positively in their overall revenues and very strong financial performance. For instance, for the year of 2021, their revenues climbed by around 43% up to $1.2 billion, which is absolutely fantastic. And on a non-GAAP basis, their earnings jumped by around 32% to 91 cents per diluted share, which is phenomenal news. Now, with that being said, they also have fantastic partnerships. So in 2021, The Trade Desk landed several partnerships with companies including Walmart, Samsung, and even Comcast. So these are huge partnerships for these particular companies, and it should make investors very bullish on this overall company. The overall TAM, or total addressable market, or TAM, for this particular company is absolutely massive. In 2021, the global digital ads market is around $492 billion. So the market that they are penetrating right now is worth $492 billion, which is absolutely huge for a company who has a current market cap of only around $32 billion. So they are basically scratching the surface of their overall total addressable market, and the author of this particular article thinks that they could be worth at one time $275 billion over the next 10 years. Also, currently, The Trade Desk is only capturing around $6.2 billion of their overall addressable market, which is less than 2%. So clearly, their overall stock price could continuously rise due to further market penetration, and I also think the same goes for Mercado Libre, which also has further market penetration, which will be very positively reflected in their overall stock prices. So I would love to hear your thoughts down below about these various companies. If you already own Mercado Libre and The Trade Desk, what your price targets are for them. Remember to go and smash that like button right now, subscribe if you are new, and I will see you in the next YT video.